Um, September 6th, 2024. My microphone on my computer was giving me issues again. So right now I am using my headphones for a microphone instead of my computer's microphone, which I usually use. I'm not sure why it's giving me issues. I should probably just buy a microphone at this point. Um, but that's, anyways, not really relevant. So we're opening a little bit, well, not a gap up, but we're now getting a strong bull bar. It's possible. One, pullback, two, pullback, three, and we're entering resistance area up here. You can see this whole thing is probably a trading range. It's something to keep in mind. So we just broke above the Globex high, by the way. The Globex low, sorry, it's a little frantic right now. I just started, so 54.66. So the Globex low is down here. So we've broken above the Globex high, and odds are when you break above the Globex high, 90% chance that, 90% chance every day that we're going to either break above the high or below the low. So I do not think that we are going to go below the Globex low. So I don't think we're going down here today. If you'll remember on the daily chart, I've been talking about how bears have a couple of bear days, but it's not very good follow through. If you sold the close of this bar and then you have these two bars, they're not really great for follow through. So it's possible that the bears are basically going to give up here and decide that this is not enough profit for two more bars after selling here, since this is such a big risk. So it's possible for the Bears, we get a profit taking day today, and we get maybe some sort of outside up day from this. So look out for a possible small pullback bull trend today, I think. I would have liked it more if we had opened a little bit more down here and started to get a reversal up, but you can see we're having strong bull bars here, strong bull bars here, a strong bull bar here. So a lot of good things going for the bulls. You can see on the hourly chart, we have a bull surprise right here. And we're starting to we're probably going to get a second leg up from this. I don't know if we get it immediately, but be interesting to see if we get follow through. The rally here, probably going to be resistance up in this area, 55.60, but on the 5-minute chart, that's pretty far away. The weekly chart, you can see the bulls are going to try to put as big of a tail as possible on this bar, and they want to get the market to somewhere around the midpoint of the week, which is around 55.68. We'll call it, you'll call it 55.68. I think that's reasonable. But anyways, so 55.68 is going to be a price point to watch up in this area if we do end up getting a rally, because the bears are going to sell, trying to get the market to close above its or close below its midpoint, and the bulls are trying to get the market to close the week above its midpoint. So that's going to be a really important thing to watch. Now, obviously, on the hourly chart, like I mentioned, I showed it a second ago, we're getting a bull surprise and we're getting a pullback after the bull surprise. So it'll be interesting to see how deep the pullback is and how much of a rally we get for a second leg. So what I meant by that, it was bad description, but what I really meant by that was this is going to get a second leg up, right? And when you get something that's going to get a second leg up, 30% of the time you retrace all the way back down below the low and then get the second leg. So you have to be interested to see if the bulls are going to buy maybe a 50% pullback around the moving average, around 5,500, big round number, 50% pullback and the moving average. So a lot of support in that area. So we might get a vacuum test of 5,500, which would be fine somewhere in here. And that would be also around this double bottom. So maybe we get a third bottom as well, possible expanding triangle open. If we do get a third bottom, so let's say we get something down here, it's a possible expanding triangle. So bull bar closing near its high on bar one, but not really worth taking. You're buying towards the top of a trading range, and doesn't seem like it's going to get much follow through. So I don't want to buy bar one, top of the trading range. Bad context to be buying a reversal. What about bar two? Well, if bar two closes on its low, you can make an argument that it's a possible high of the day. However, I still think it's going to be a trading range open. Even, bar two is obviously bigger and stronger than bar one. It's a 20-point bar, so the bars are really large today, something to keep in mind. It's a 20-point bar, and it's a lot larger than bar one, obviously. However, the bulls have a really, really strong close on bar one, and they've had a lot of strong closes over the past 15 or so bars. So I'm not all that convinced that we're going to get a huge bear trend day, even if two can close on its low. I am more looking for a pullback here and then to buy for a swing. So the bears are hoping that one is a second leg trap, 78, 79, and then pull back 80, 81, second leg trap, bar one, and then we're going to get a big reversal down. The bulls are hoping that we're still in, we've been in a weak bull channel, right? So higher low, higher low, higher low, minor but lower low, and then you're trying to form another higher low. Then we have higher high, higher high, higher high. So bear leg in a trading range, bull leg in a trading range would be a simple way to look at it. It's possibly a wedge, bar 55, bar 65, and bar 2 now. This big bar, if it closes on its low, really damages the chances of some sort of bull trend day today. However, I think bar 1 might damage the bear's chances of a bear trend day. So kind of difficult. I'm just looking at something real quick. So yeah, again, like I mentioned in the daily chart, the bears are hoping that to basically get a lot of bears to step in. We have 3 straight bear closes on this chart. We have 3 straight bear closes. They're hoping basically that the bulls will give up and we'll get a huge bear trend day, maybe down to like 5,400. We're already within this gap, which was an important gap, and we've got another one in here. We'll test down to it, I assume, but this whole sell-off on the open might just be a vacuum test of 5,500, which is an important price point. So huge outside down bar closing near its low. It's a huge bear surprise, and it clearly makes the market always in short. So as of right now, on the close of 2, we are always in short. It's okay to sell below 2 for a swing. I am not going to personally. The risk is really huge, and I think the bulls who buy below 1 and are willing to scale in are probably going to end up making money. So I'm not personally going to buy below or sell below 2. However, I do think that the traders who do that are going to make money, or are going to get a second leg enough so that they can make money, at least a scalp. I don't think 5 points is going to be an acceptable scalp on this day. I think it's going to be 10 points because these bars are so huge. We just had a 25-point bar on bar 2, and bar 1 looks small, but still a 13, 14-point bar. So I still think that we're going to get. I think 10 points is probably a bit more appropriate scalp size rather than 5. So you can see we're testing this support. They bought. Maybe they'll buy again, but this is really strong. So I don't know. So what am I looking for? Well, if we get a pullback in a low 2 short or some sort of double top, then you can sell that. Or if we start to go a little more sideways here and get a double bottom, basically, if I'm going to buy, I need to be buying the always in flip. So whenever I'm convinced that we were about to flip to always in long, that would be when I would look to buy in this certain context. Because we're towards the bottom of possible trading range, you're looking for the opening swing. So if we get some sort of double bottom over here or something, and then a good looking bull bar that flips the market to always in long, that's what I would be looking to buy. And if we get a pullback and remain always in short in some sort of low 2 with smaller risk, maybe a wedge pullback, so maybe a wedge double top, something like that, I would be willing to short that. But for now, there's nothing for me to do. I wanted to go on a little bit of a rant about the importance of your personal life reflecting in your trading. And trading is not something. This is not a career that's separate from your life. It bleeds into your life in a lot of ways. And the more disciplined you are in your personal life, the more disciplined you will be when reading a chart. And the more disciplined you are when reading a chart, the more disciplined you'll become in your personal life, and vice versa. And so that's something, something to consider. And your morning routine, I think, is extremely important if you're going to be a trader, because it's for me at least, it's my favorite part of my day. So I get up around 6 and the market opens at 7:30 here, and I have a very, very strict schedule that I follow every single day because it just gets me in the mind space to trade. And that's my favorite my favorite time of the week. It's basically 6 a.m. to 9 a.m. Monday through Friday, especially Mondays. So you have a whole week of trading ahead of you. I think it's awesome. But I think that, so what I do, I get up, I take a shower, usually I do cold showers at the end for a couple of minutes. So I think the cold is really, really, really helpful. It's a really great way to ingrain discipline. And then get out of the shower, I make myself breakfast, and then I stretch. I do breathing exercise like Wim Hof usually. then a quick meditation, and then it's about time to start work. So I think that it's really critical that whatever your routine is, I don't know, could be, probably is totally different than mine, and that's fine. But just make sure you are doing the same thing every day, because it's going to build that discipline in you and build that readiness to start your workday and to start trading. So I think that your morning routine is really, really important, and being disciplined within your morning routine, waking up and being disciplined for the first hour and a half of your day is going to lead into you being disciplined during the chart for the remainder of your day. So I think that's an important thing to think about. Anyways, bar three. So if this closes on a tie, it's probably a credible buy. You could argue it's some sort of head and shoulders, left shoulder, head, right shoulder, inverted head and shoulders. Truncated wedge is another way. All the truncated wedges really is when you get the first two legs of a wedge, and then the third leg of a wedge is unable to fall below the second leg because there are so many bulls willing to buy, and they're too eager to buy, so they buy, and that causes the market to bounce early, and so you end up getting a truncated wedge where the third low is not below the second low. So three, disappointing, I think. We're on a flat moving average, but we have one good bull bar so far today and a disappointing bull bar on three. I think the bears who sell below two and are selling right now around a 50% pullback are probably going to be able to make money. We might have to get back to the bar two low. However, this is not nearly as bearish as it was a bar ago. Bar two flipped the market always in short and was very bearish. However, the bears needed follow through and they didn't get it. So two just looks like a leg in a trading range, and we might start going a little more sideways here. I'll be interested to see if we can get some sort of double bottom. So I'm pretty open to buying right now. I think that we're probably going to end up getting a bounce. Are we going to do it in the next 2 or 3 bars? No, I don't know. Probably not. But I think that if we go sideways for a little bit longer and then get a bull bar closing near its high, that's something I would be willing to buy. So what if 4 is a bull bar closing on its high? Can you buy? Yeah, I think you can buy and just basically take a chance that we've seen the low of the day. I think it's aggressive though. I'm kind of considering it, but I do think that we're going to pull back a little bit more first. So it's unlikely that I'm going to do that. I think that 2 is going to get more of a second leg. And 3 is not a good enough signal bar. Had 3 been a good signal bar, so let's say 3 closed on its high, and then 4 was another bull bar closing near its high, that would be a little bit better. But I'm not really that sure about buying the close of bar 4, even if it closes strong. Again, I don't think it's wrong to do it. You say truncated wedge on the open and just take a chance we've seen the low of the day. I don't think it's necessarily wrong, but it's just not great. You're probably going to sit through a deep pullback if you do that. So if you do that, do you buy and then manage the trade? No, you buy, you put a stop below 3, you go take a walk for an hour. I don't ever actually go take a walk. I'll usually just watch TV or because I found that I used to do that. I used to go take a walk whenever I would take a Walmart trade, but if I would come back and I had taken a walk and I got stopped out and lost money, I would just feel really dumb. So what I do now is if I'm taking a quote unquote Walmart trade, is I'll take the trade and then I'll set my OCO bracket, and then I'll set notifications on each side of the OCO. So whenever one gets triggered, I'll get a little notification and it'll tell me. And then I just put, whatever, Netflix, HBO, whatever you watch, I just put it over my trading screen and just wait to hear a ding. And if I don't hear a ding within, 45 minutes to an hour, then I'll look and just see where we're at and reevaluate my trade. But sometimes the best management is no management. Another big thing is you have to just be willing to lose. I've found before, sometimes when I would start making money or I'd have a really good week, I would spend too much time trying to protect the profit, and that would kind of cause me to lose money and miss out on trades because I'd be overly anxious trying to protect what I had made because I didn't want to give it back. And you have to just kind of be willing to lose. So, when you take a trade, you kind of have to, like yesterday when I mentioned I had sold, 18, and 19 was a bit disappointing. I still thought there was a reasonable enough chance of a bear trend that I just decided I would let myself get stopped out if we traded above above bar 18, and that was fine. And so I basically just put my stops above 18, and went and did something else for like 30 minutes, came back, and okay, I didn't get stopped out. So bar 4, we have a double top on the open and a double bottom, so it's a classic trading range open. Do you sell below 4? I would not. You're selling a lower high, yes, but in the mid, it's just a trading range. You're selling in the middle of it or the lower third of the trading range. So really not worth it. You're looking to buy low and sell high right now. You can see we got back to around the close of 2. So, I mentioned the bears who sell below 2 and they scale in, they're probably going to make money, and that's probably what's happening right now. Another reason you don't want to sell below 4 is because the bears who sell below 2 are disappointed in 3, and they're probably going to use 4 to exit. And that's probably what's going to happen. It's kind of what's happening when you're seeing these bounces right here, but I think we're going to get back to the 2 low. Oops. Okay, so look what happened. We got back to 1 tick below the 2 low where the bears sold, and you saw it bounce. It just bounced. That's why. It's because those bears are buying back shorts. It's probably a little more likely that we've seen, well, it is, I guess, a little more likely that we've seen the high of the day than the low of the day. Another way to think about that is which side has the better signal bar. 2 is a better signal bar than 3. So it's a little more likely, and we're obviously closer to the 3 low. But even at the midpoint of the day, it was a little more likely that we had seen the high of the day than the low of the day because 2 is a much better and stronger bar than 3 is. So I think we will probably fall below 3. And if we get a reversal up from down there, that would be a credible buy. But the bear channel down is tight. So, you imagine we're going to get below 3, maybe on this bar. I don't know. But you'd have to imagine we're going to get below 3. And if we do, and we get a reversal bar, that I would probably buy. I'm not really interested in selling unless we pull back. So I'm not willing to sell in here. I would more be interested in selling up here after a pullback. The same way I'm not interested in buying up here. I'm interested in buying down here. The reason I'm talking about buying more is because we're just closer to the price that I would be willing to buy than we are to the price where I'd be willing to sell. So would bulls argue it's a second leg trap? Possibly. If we get 5 bear bar, it might be a second leg trap. I still don't think there's much to do here. Again, bears are using limit orders to make money. If you're selling below 2 and you just held, you haven't even made a 5-point scalp yet, and it's 5 points isn't even an acceptable scalp, and you're risking 25. So it's not a stop order day. Or it's not a stop order day so far. It's not a stop order open. The only traders who have made money would be selling below 4, and I don't think that was a very good trade. So 5 is better if it closes below the 3 low and below the 77 low from yesterday. So it would be better for the bears if they get that, but I still think if you're selling down here, you'd be selling low. You don't want to sell low. You want to buy low. You want to sell high when you're in a trading range. So I think there'll be a 40-point swing today. I don't know which side. Maybe it's bar 4. Bar 4 might be the 40-point swing, but the bars are so large that it makes me think that we might get a swing worth 40 points today. Okay, so let me see. I can't see if it closed below the 76 low. So it closed at the bar 77 low from yesterday. Good for the bears. That's a pretty strong looking bar. However, um, I still feel it feels like selling too low, so I'm not willing to do that. You can see some bulls buying the close, trying not to let it trigger. What if 6 closes on its high? It could be a credible buy. I'm gonna have to think about it, to be honest. I can't really give you a decision as to whether I'd buy it. I'm leaning towards probably not. If it's just the same size as bar 5 and a bull reversal, I'd probably lean towards not buying it. But I kind of have to see how it looks. The moving average is a problem, where we'd be buying right on a flat moving average. But you're just taking a chance that we've seen the low of the day. It's also a wedge now, 70, 77, and 5, 6, something like that. So should get 2 legs sideways to up starting relatively soon. I would rather, it be some sort of reversal bar, or like if bar 5, I'd rather have bar 5 close like this size, or bar 6 close this size. If it closes this size, I'm going to buy it. But I don't want it to get too big, because traders don't want to risk that much. So again, if it just basically sits and stays this size and then just closes on its high, that would be optimal. I would take that trade. Just taking a chance we've seen the low of the day. Again, if I take that trade, I'm probably going to lose with a small risk and a potentially large reward, and it's a tight channel down. So if I take the trade, it's a swing trade for sure. But that's my goal with trading, is to be a swing trader. So if it's a reasonable swing trade on the open, really my goal with trading is to well, I say my goal. It is my goal, but it's what Al recommends and Brad recommends that you do in order to become consistently profitable. And it's true, is you start looking for the opening swing. That's all you do in the beginning of the day, is you just really try to pick the possible high or low of the day and trade based on that. So when I'm saying I'm buying above 6, if it closes on its high, which I still will probably do, I'm saying that it's a possible low of the day. And if it is the low of the day, I'm risking 6, 7 points, maybe 8, trying to make 40 or 50. So it's not a high probability trade, but that's fine. So the bar, I'm just kind of surprised the bar has stayed this size. There are bulls front running it, so they're basically the reason the bar would grow is because too many bulls end up front running the trade, and it ends up getting too large. And then some traders, so the swing traders, it gets too large, they don't want to risk that much, and the bulls, who were just trying to make the bar close on its high, ended up front running it too much, and then suddenly they're looking at their account and they have a big profit, and so they say, okay, well, I'll just take the scalp. So what if this becomes, there's a big tail on the bar. So what if it's a bear bar closing near its low? I still think there's too much overlap, so I'm really not willing to buy. Keep in mind, we've had a surprise on bar 7 every day this week. So just something to think about, as bar 7 is the next bar. You can usually tell by the way your active trader ladder or matrix, whatever you want to call it, is moving in the first 2 or 3 seconds of the bar, if it's going to be a big surprise. So it's no longer an inside bar. We've now triggered below the sell below bar 5. If 6 closes on its high now, you potentially have trapped bears who sold below bar 5. So even if this closes on its low, I do not want to sell it. I'm more interested in reversal. I don't think I'm going to get it on this bar, but so nothing to do for me here. Maybe we test towards yesterday's low. You can see we're at a big round number of 5,500, so we might have to test back into that area. The market was paying attention to it. We oscillated around in that higher trading range yesterday, from bars 25 to 49. Then we came back to it again on 70, 77, and again on 5. And when we came to it on 5, we ended up bouncing a little bit, if you were watching just then. So 6, a bear bar. It's possible we get a bear trend day today, but I'm not willing to bet on that yet. I would rather wait. So this to me, it still looks more like a leg in a trading range. And when it looks more like a leg in a trading range, I'm resistant to trading in the direction of that leg. I'm more interested in trading a reversal. So what if seven's a big bull bar, big outside up bar? I'd probably buy it. If it's a good looking reversal bar, I might just buy it anyways. But the problem is it's tight channel down, right? So that's your big issue. Might be a leg in a trading range, but it's still a pretty tight channel down. But I do not think 6 is a good sell to close bar. Sometimes you get a reversal right at the prior day's low. So if we get a good looking bull bar here, it would be a double bottom with 34 yesterday. Could be a higher low double bottom. And so there are examples. I don't have them in my encyclopedia. They are in Al's encyclopedia, where the day goes almost outside down and then reverses and becomes outside up. So, or sorry, it almost breaks below the low and then it reverses and goes above the high. So you have almost outside, an almost outside up day is what it would be, but we don't end up going below this low. It'll probably function similarly. If you do get a good looking bull bar here and we rally, let's say, it'll probably function in a similar way to an outside day. So if 7 closes on its high, I'm probably just going to buy and give it an hour. In trading, less is more a lot of the time. So if we just keep getting bars that look like bar 6 with tons of overlap and it just goes down, that's fine. You can do it without me. It's not a problem. So again, if 6 is a good looking bull reversal bar, I'm going to take the buy and just take a chance we've seen the low today. Obviously, I'm going to trade small, not a super high probability trade, and the risk is going to be large regardless. So I'm going to have to trade small. On these days, these types of days, I think it's always tempting to trade a normal position size because you can make so much potentially, but it's really just not worth it. Because you do that a couple times and then you lose a bunch a couple times, and I don't know, it's really not worth it for me. So the only thing that bar 7 can do to make me take a trade is be a bull bar closing near its high. If it's any sort of bear bar, I'm not going to sell. You can see if you sold below 6, you're 3 minutes into the bar and there's a lot of hesitation. So if 7 can close on its high, if it's this side, I would like to see it get a little bit bigger, to be honest, because the channel is so tight. So I'd like to see a little bit of a stronger bar. But you can see, I know it's 2 legs down, so it's 1 pullback 2. You say it's 2 legs in a trading range, and that's true. And you can also say first reversal up, revert, then down, second reversal up, third reversal up. So you could argue 2 legs down or wedge. I think either one is fine. So again, if 7 can close on its high, it's good enough for me, but it's not looking like it's going to do that. If it doesn't, I think we're going below yesterday's low. So it was a possible almost outside or almost yesterday's low reversal, and we're not getting it. So 4 straight bear bars is a problem. The first reversal up is going to be minor. However, I'm just not that interested in selling. It's possible the bulls give up and we get a big bear bar on bar 8. But just look at how much overlap there is with the bar 7, with bar 7 and bar 6, there's just so much overlap. It's really, I just don't want to sell. There's too much risk of bears buying back shorts. And even if 8 becomes a big bear bar, there's still going to be so much overlap with 7. So we have so much overlapping bars that's really just not worth trading it. If we do trade above 7 during 8, then there's going to be sellers above scaling and higher. Just looking at some stuff from the prior couple of days. The market a few weeks ago, I don't remember exactly when, well, I can't seem to find it, what I'm looking for, but it had this, quote unquote phase. I say the market goes through phases. It's not really what it means, but it had a, basically a week in a row, like 4 or 5 straight days where it would just do something like easy like this in the first, 10 to 12 bars. It would just give a really, really very tradable open. And I really, it's fun to trade when the market gives you a trade that makes a lot of sense really early in the day. So again, it's looking like bar 4 might be the opening swing, but that's fine. I'm not, I'm not going to sell below 4. Could you sell the close of 5? You could have, but again, that's not my trade. Possible 4-5 spike, then pull back during 6, and this is some bear channel of some sort. But again, even if 8 closes on slow, there's so much overlap with 7. It's a tight channel down, it's true, but I don't know, not for me. Being short here is a little bit of musical chairs, and it's not as bad as other situations with that, where you can get a really, really blatant reversal against you, but it's just, you get caught on the wrong side of the musical chairs type of trades enough times, you just learn to stop taking them, because the profit potential usually isn't all that big, and your risk can get big really quickly. So, the kind of ironic thing about the musical chairs type of trades is that you have to be a really, really good trader to take them, because your management has to be extremely good, but no one who's a really, really good trader takes them. So it's kind of this weird thing with that. What if 8 closes on its high? It's still a possible low, but it's definitely not as good as if, let's say, 7 had closed on its high or 6 had closed on its high. I still think we might get one more leg down, even if 8 closes on its high. So it's okay to buy 8 with a wide stop if it closes on its high. But this is kind of the problem with selling below 6. If you took it, you were not able to make 10 points yet, which is, again, I think the minimum scalp today is 10 points. So you were not able to make a scalp, and now the market is going kind of against you. But what do you do if 8 closes as a doji bar, right? Do you get out above it? Well, maybe, but I don't know. An easy thing to do is just get out like 5-10 points above any bar, probably 5 points above bar 7 would make sense, or 1 tick above bar 6, possibly the top of the channel. But it's difficult. It's difficult trading like that. So again, looking like another disappointing bar for the bulls on bar 8. There is something to keep in mind, is that if the bulls keep not getting a reversal up, they keep trying to get a bull bar and they keep not getting it. And if that continues to happen, you're going to get a bar that looks like bar 5. You're going to get another one of those because the bulls are going to give up. So when you're in this area, 6, 7, 8, where the market's going down, it's not doing it in a very dramatic fashion. One of two things is going to end up happening. Either the bears are going to give up and we're going to get a bounce in a bull bar, and then we're going to form a trading range where the bulls are going to give up, and we're going to get a big bear bar closing near its low, looking like bar 5. What is more likely right now? Well, actually, let me just check something. Is this open? Is this gap open? Okay, we have a 1 tick open gap with that low. So there's an open gap between this low and this high. If 9 is a huge bull surprise, flipping the market to always in long, I would buy. But anything other than that, no. I was willing to give bulls a chance to buy if they were able to get something that made it look like a bear trap, made the 5 look like a bear trap or 6 look like a bear trap. But at this point, I think the sell-off is its own leg in the trading range. So even if we bounce here, unless it's a huge bull surprise, I don't think there's much worth buying. So this is an important close. If we get another bear close here, that would be 6 straight bear bars or 6 straight bear closes. And it would probably be enough to reset the market cycle. I am only willing to trade a reversal up or a pullback for the bears. So let's say we get a bounce here and then some sort of low too short, something like that. I would be willing to sell that. And let's say we get a bounce and then a good looking bull bar, then I would be willing to buy that. So it looks like the bulls might give up here and we might just go lower. Again, I've been flat the whole day and that's fine. I think it's kind of interesting. I think the bears tried to get the bulls to get a give up bar on 9. You can see we broke out below the channel, 7-8. However, bulls ended up buying it. So a little bit disappointing, I think, for the bears. Am I willing to do anything right now? No. I mean, I think that we're going to be pretty sideways for a little while. I'm not really willing to sell, and I'm not willing to buy. So for me, I'm pretty stuck on the sidelines right now. Probably going to take I'll be back in like 10, 15 minutes. And again, I'm not willing to short anything down here. There's way too many tails in here. So any sort of sell-off just looks climactic, but it's a lot of straight bear bars. This might be the 40-point swing. So it needs to get here to be 40, and I would not be surprised at all if we did. But way too many bear bars for me to buy, but I'm not really interested in selling these either. So that's it for now. So there you go. On bar 11, the bulls gave up. Why did the bulls give up? Is this just too many bear bars? The bears, the bulls they had a couple of chances. If they were able to get pretty much a bull bar on any of these bars, then it probably would have just turned into a trading range. However, they just weren't, so they gave up and we had to go lower. Again, the sell below 4, that seems to be the opening swing, but that's okay for me to miss it. I'm not that worried about it. I didn't think it was very likely that we would end up doing this on the open, but it's possible we get a big bear trend day today. And why is that? Because if you look, we got this, and it's the same pattern, right? It's the exact same pattern as the 5-minute chart. This is a couple of bear bars, and the bears are hoping the bulls give up, and we just start to collapse. The same way that the bears were hoping the bulls gave up, and they did, and we're starting to collapse. So this pattern on the 5-minute chart is a reflection of what might be happening on the daily chart. 60-minute chart. So you can see a good looking bull bar, but then completely reversed by this bear bar. Now we're breaking below the slow. However, how much lower are we really going to go here? So I'm pretty okay with being stuck on the sidelines here. Nothing to buy. So you're short or you're flat. I am personally, I would rather be flat, which is why I am. But for me, I'm just not really I didn't think it was, like I said, I didn't think it was likely that we would do this. And so I tried to, structure a trade on what I think is the most likely thing to happen. And I just don't, this just didn't feel all that likely. But still, for me, nothing to do. What am I looking for in general? Well, if we get a pullback and then a low too short, that would be fine. So 12 consecutive bear bars closing near their lows. 11 and 12 is a sell climax. So if we do bounce, the first target will be the top of the sell climax. However, we have had, this is obviously really extreme, right? We've had 9 straight bear bars, and that's pretty unusual. There was one day a few years ago where we got, I'll pull up hold on. It was really fascinating. We basically got like 24 straight bear bars on the open. And at that time, I was in Al's trading room. And I remember him talking about it. And even he was saying, he was pretty fascinated. He said he'd never seen it before. So I do have the example. Let me just edit. You can see we got bear bar, bear bar, bear bar, bear bar, bear bar, bear bar, and then bulls gave up, bear bar closing near its low. And then we got all bear bars all the way down. So I thought this was pretty interesting. That was okay. So that was only a year and a half ago, actually. I thought that was more like 2 or 3 years ago. It was only a year and a half ago. We just got all these bear bars closing. A lot of them not really all that great, but it just kept selling off, which I thought was really unusual. And when you get this big of a sell climax, obviously the rally is going to end up being limited. So can you make an argument? First reversal up, second reversal up, third reversal up? No, I think the market cycle has pretty clearly been reset. Still, for me, nothing to do. Yep, you can be short. I thought 10 or 11. 11 is credible for a swing. You're taking a chance that we started a big bear trend day if you do take the sell. And I think the open gap with the 5 low and 7 high is important. And gap with the 10 low and the 10 low and whatever the pullback is important as well. So if we do pull back here, the bears are going to try and keep the gap open with bar 10 low so that they can cite 2 open gaps early in the day and a possible small pullback bear trend day. This is a bit extreme though. Small pullback bear trend days do not usually do this. This might be more of a sell climax. Just flip to the inverted chart for a second, because sometimes I like to look at that. I know that I'm better at trading bullish patterns than bearish patterns, just because you see them more often. So it's a bad habit of mine um, to miss a lot of bearish trades. But had this been the actual ES chart today, it's possible I would have bought somewhere in here. But I don't know. I just wasn't all that bearish to start the day, and sometimes this is going to happen. It's fine. So for me, I'm just going to wait. Maybe we get a pullback. It's obviously a pretty extreme sell climax, but maybe we get a pullback in a low too short. That's acceptable. But again, just looks like it's going to end up being disappointing here. Or obviously, doesn't look like it's always in short. We're going lower, but I don't know. So what am I looking for the remainder of the day? Again, if I'm just going to let this go. This is really extreme and really unusual. And when things are extreme, I tend not to trade them. So I know I'm not going to be doing anything in the next 45 minutes, and usually I end these videos around 9, but I might just end it, or like 9:15, but I might just end it now. I know I'm not going to take any trades in this video, but basically what I'm looking for is one of two things. Well, what I would like to see happen is around bar 18 to 20, we start to go sideways and then look to sell for a second leg down. You can see we basically tried to do that yesterday, and the bulls got trapped. So the bears, they're going to try again to get the sell climax, or I guess, bear trends in the open, sideways, and then you look for a reversal back down around bar 40. Either that, or we go sideways for a lot of the rest of the day, and then get a reversal up around bar 40. Or we go just sideways the rest of the day. So I'm paying a lot of attention to bar 40 today, or that midday reversal window, since I think we might try and get some sort of midday reversal. I think we've been, we got kind of one here. We were trying to get a midday reversal yesterday. Didn't really end up happening. So I think traders have tried to get some sort of reversal or continuation second leg down in the middle of the day a couple of times this week, and it just hasn't really ended up happening. So for me, I am going to end the video here. And today hasn't been my most focused day. I'm a little bit all over the place this morning, which is fine. It happens sometimes. But when that's happening, you have to just be really, really aware of the fact that you're not as focused as you could be, and be more resistant to taking trades unless it's exactly what you want to see. So yeah, all right, that's it.